Disney stock just reported its 2022 Q3 earnings, and there was a lot of positive news for shareholders. After releasing earnings, the stock went up over 6% after hours. They beat expectations across the board in streaming subscribers, revenue, and earnings per share. On top of that, the company announced some really important details about the future Disney Plus pricing and their ad-supported tier. I just read through the entire earnings report and listened to their earnings call, so in today's video, I'm going to explain everything you need to know about Disney's Q3 earnings. My name is Zach, and you should leave a like and subscribe to the channel if you enjoyed the video. Here are the Disney stock operating results versus the expectation. Adjusted earnings per share came in at $1.09 versus 96 cents expected. Revenue came in at $21.5 billion versus $20.96 billion expected. Total Disney Plus subscriptions came in at 152.1 million versus 147.75 million expected. That's now 3 quarters in a row of Disney Plus crushing subscriber estimates. It should be noted that their direct-to-consumer streaming segment is still losing money due to increased content spending. On their earnings call, the Disney CFO reiterated that 2022 is going to be the peak year of losses for Disney+. They announced major news around monetization that makes this seem like a certainty. We'll discuss this later. As the direct-to-consumer business matures, the rest of Disney's business is bouncing back to strength. Their linear TV networks are still cash cows. It's actually impressive that during this cord-cutting era, the linear TV financials have remained stable and slightly growing. Disney's theme parks have bounced back and are absolutely crushing it. On top of this, the movie box office is returning to strength. More details on all this later. First, let's discuss their streaming business in depth and break down the important pricing news. Direct-to-consumer revenues have grown 19% compared to Q3 2021. Losses have increased with a $1 billion loss in Q3 2022. As I mentioned earlier, they said fiscal 2022 will be the peak year of operating losses. They saw massive subscriber growth in Q3. Across their 3 streaming services, Disney+, Hulu, and ESPN+, they now have 221.1 million total subscribers. This is an overall gain of 15.5 million subscribers in the quarter. Nearly all of this was from Disney+, which gained 14.4 million subscribers in Q3. Over the past year, total Disney Plus subs have grown 31%. This is a fast rate of growth for a service already reaching such a large scale. Let's break this down in more detail. From Q2 to Q3, domestic Disney Plus subs grew by 100,000 to a total of 44.5 million. This may seem weak, but it's important to keep in mind the massive US political drama that was occurring during the quarter. Many popular conservative organizations and figures were calling for boycotts. So even in that bad environment, they still managed to gain subs. International Disney Plus grew 6 million subs to a total of 49.2 million. These are higher average revenue per user regions. Together, that's 93.6 million subscribers. Disney Plus Hotstar, their cheaper Indian branded service, grew 8.3 million subscribers to a total of 58.4 million subs. In total, Disney Plus now has 152.1 million subscribers. From Q2 to Q3, ESPN Plus grew 500,000 subscribers to a total of 22.8 million. Total Hulu subscribers grew 600,000 to 46.2 million. On a year-over-year basis, you can see the large growth across their direct-to-consumer segment. Now, growth is great, but over the long term, profits and cash flow are all that will matter. Luckily, Disney just announced major actions that will help ensure profitability. The company announced that the ad-supported version of Disney Plus will be launching on December 8th, 2022. This news coincides with price increases for the no-ad services. These changes will impact each of their streaming services and the Disney bundle. Here's the new pricing. Disney Plus with ads will be $7.99 monthly and without ads $10.99 monthly. Hulu with ads will be $7.99 monthly and without ads will be $14.99 monthly. ESPN Plus with ads is $9.99 monthly. These also have annual options. However, the best part of Disney's streaming business strategy is their bundle, which provides an unmatched value in the market. They now offer more options with or without ads. Disney Plus and Hulu with ads for $9.99 a month, Disney Plus, Hulu, and ESPN Plus with ads for $12.99 a month. Finally, all 3 services with no ads for $19.99 a month. These price increases will help make their direct-to-consumer segment profitable by 2024, which is their long-stated goal. It also demonstrates the pricing power these services have due to their strong brands and unmatched bundle value. The company stated on their earnings call that from their internal data, they expect very little to no increase in churn from these price increases. The reason for this is that the ad-supported tiers give way more flexibility at multiple price points, allowing users to choose based on their tolerance of ads. The best part of this is that cheaper ad-supported tiers have proven to generate as much, if not more, revenue than the higher price no-ad tiers. Disney's streaming service revenue per user is going to skyrocket over the next few years. Over the long term, Disney CEO Bob Chapek said that they will have a lot more room to increase pricing. This makes sense considering how that still poses a great value compared to other services. At this point, I think it's a certainty their direct-to-consumer segment becomes profitable in 2024. Over the next decade, these services will be money-printing machines. It's really important to remember how young Disney's direct-to-consumer business is. There is a long growth path ahead. In the latest earnings call, the company also updated their 2024 Disney Plus subscriber guidance. Previously, at 230 to 260 million by the end of fiscal 2024, they broke it into a more detailed look. Excluding Disney Plus Hotstar, they expect 135 to 165 million subscribers. This is very strong and in line with expectations. For Disney Plus Hotstar, they stated up to 80 million subscribers. However, they said this number will be more refined in the upcoming quarters as they measure the impact of their decision to not pay billions for cricket sports rights. This puts the new range at 215 to 245 million subscribers. I've seen some articles calling this a guidance reduction, but it's really more nuanced than that. They really are lowering it more for Disney Plus Hotstar, which brings in far less revenue anyway. It's still important though over the long term. This doesn't alter my thesis at all, as I'm more focused over the next decade, and my intuition was always around the lower end of 230 million anyway. As we look at Disney's business, it's important to remember that streaming is only part of the picture. Linear TV is bringing steady profits to Disney's entertainment segment as direct-to-consumer losses increase. Additionally, movie theaters are bouncing back and providing a fantastic path for monetization. Doctor Strange pulled $950 million and the new Thor had over $700 million at the global box office. Their movie slate is ramping up, and over the next few years, this will prove to be very significant. The ultimate test will be 2025 when they plan to release 2 new Avengers movies. If they can get remotely close to Avengers Infinity War and Endgame numbers, that will be giant for the movie industry. The ability of Disney to release blockbuster movies via box office is a huge advantage for monetization compared to Netflix's model. They can make all their money back and a huge profit through the traditional medium. Then Disney can release a movie on their service and see another bump then. You're basically double dipping. Personally, I don't think the movie theater business is disappearing anytime soon. Disney Parks segment is doing fantastic. Their domestic parks have record revenue and profits. Spend per customer is up 40% from 2019. In Q3, domestic parks generated $5.4 billion in revenue and $1.6 billion in profits. On the earnings call, they stated there is still excess demand and no sign of it slowing down. International parks are still losing money for now. Disney Shanghai and Hong Kong were closed in the quarter and are now reopening. Over the long term, international parks will continue to reopen around the world and be a massive part of the Walt Disney Company. Consumer products generated $1.1 billion in revenue and just under $600 million in Q3 profit. The story of the Walt Disney Company is one of a diversified media company with great brands and a clear path to innovating for the future. However, there is still a long way to go. Since the pandemic, major parts of Disney's business were shut down in unprecedented fashion. This was all while they underwent a transformation in streaming where they were foregoing short-term licensing profits and investing to build their own platform. It was a challenging few years, but the path to success is clear now. For those dividend-focused investors, the Walt Disney Company still has its dividends suspended. In the past, they paid a reliable and growing dividend. The management has stated that over the long term, their capital allocation strategy includes dividends and buybacks. That wait will likely be longer. My hunch is that the dividend may not return until 2024 when streaming becomes profitable. Personally, I'm okay with that, as this is a company I'm invested in for the long term. Disney stock is one of my largest holdings, and I own it in my dividend portfolio and Roth IRA. However, don't take my advice blindly and be sure to do your own research before making any investment decisions. Thank you for watching Dividend Data. You can sign up for dividenddata.com to use my software and join a Discord community of like-minded investors. If you follow me on Twitter, link in the description, you can get real-time updates of my buys and dividends coming in. Please leave a comment below, and thank you for watching.